It looks like actually a miss, 62 cents a share. Earnings estimates were calling for 66 cents a share. That's a rare earnings miss for Nike. Though revenues up 10.2 billion was pretty much a match. 4% revenue growth, 10% revenue growth looks a lot better if you take out the currency impact. I'm going to continue digging through, but I will
big move in the stock price,
more.
down 4.7%.
That's a miss. Look, 20 out of the 20 last quarters, Nike has beaten earnings per share expectations. This is an on-the-surface mix. I'm going to dig through and I'll get you more.
Liz, what's your? I mean, the setup for this particular quarter wasn't too tough.
Yeah, it didn't seem like expectations were too terribly high heading into the quarter, but obviously they were a little bit too high. I think the stock with the valuation where it is just, it makes it tough to perform, particularly on earnings. People are looking for validation of the re-rating that the stock has had over the last several years, and certainly from the headline numbers, it looks like that might not match up for this quarter particularly.
Sam, your first reaction?
Well, I mean, the numbers miss. It looks like it was on the gross margin. The U.S. business, North American business was better than expected, and China remained up 24% on a currency-neutral basis. So it looks like things are pretty strong. I didn't look at the overall.
I mean, gross margin's 45.5%. The estimate was about 45.6%. Right. So pretty much in line. I think psychologically that 24% growth in China is important to see if they could keep that up in this kind of environment where China's slowing and the nationalistic attitudes are picking up. And North America, you say, comes in
at
line.
7%. The street was looking for 3.5%. So that was significantly better. It looks like they probably just were spending more money on future growth, and they tend to do that, and it tends to pay off over time. So we'll hear from them in about 45 minutes. And
well, the company detailed, overhead expense up 12% year over year.
Yeah.
So that's obviously faster than revenue was growing ex currency. So that could account for some of that.
Liz, in terms of what to expect on the call, clearly very much affected by the trade war with China on both the supply side and the demand side. What are you looking to hear on that?
Yeah, I think people will be interested in their comments. Obviously, they have about a quarter of their business sourced out of China. But, Sam has actually done some interesting work, I think, on how much of that actually comes to the U.S. And at least if I can believe Sam's work, it's less than people think. So not a whole lot of that is coming to the U.S., so there shouldn't be as much pressure, but I'm sure people will be very, very interested in what they have to say about trade.
I think they have to quantify it or at least give us something, because last quarter it was really before the war of words heated up between the U.S. and China, and we got that threatened next $300 billion worth of tariffs. Do you expect them to actually lay this out on the call? The costs, what it could do to margins, what it could do to consumer prices?
Well, I think because they have such yes, but I do not think it sort of directly affects Nike as much as it sort of does if it happens anyway. Nike, we think, is out of China, is bringing in about 10% of the product, mostly equipment and a little bit of footwear. And since they have such a global exposure, they can balance the prices. The problem is that, if prices go up and this tariff hits, everybody's going to be impacted, and then people are just going to have less disposable income. And that's a bigger issue for Nike, but it's not direct Nike. It's everybody.
I just want to recap some of the numbers because we've been kind of giving it to you ad hoc. So just in case you're wondering, 10% currency neutral growth on revenues for Nike. That comes in line. It was the miss on the bottom line that maybe has the stock under pressure. If you look by geography, it's really healthy growth across the board. North America growth 7%, Europe growth 11%. They've taken share there from Adidas in its home market. Greater China, psychologically important, up 24%, continues to power this company's growth. And then, in Asia, Pacific and Latin America up 13%. So there's no real weak spot in terms of the geography. Gross margins continue to go up.